This is the Uggland House, a modest 5-story building located somewhere in the Cayman Islands. As of 2020, around 20,000 distinct corporate entities had their official registered home right here. Former U.S. President Barack Obama famously condemned this exact address, calling it the largest tax scam in the world. Bernie Sanders noted the mathematical absurdity. This is either one incredibly crowded building or a phony address engineered solely to dodge federal tax liabilities. This chart shows the macro scale of the system. Over $10 trillion sits invisible inside sovereign tax havens globally. That massive capital block entirely dwarfs the annual gross domestic product of Japan. This massive discrepancy exists because the global financial rulebook split in two. There is the standard set of rules for the middle class, and a completely different, highly favorable ecosystem constructed specifically for institutional wealth. If you operate as a standard salaried employee, your financial life is completely visible before the money even hits your checking account. Every paycheck is automatically taxed, every corporate bonus is tracked, and under the Bank Secrecy Act, large transfers are immediately flagged. This animated flowchart compares that daily reality with the offshore system builder. On the left side, the salaried worker's income hits a W-2 blade and shrinks immediately. On the right, the builder's revenue flows seamlessly through a multi-node offshore pipeline, arriving untouched. This is perfectly legal tax avoidance. The green path relies on statutory rules to minimize what is owed. This entire system is built on one non-negotiable principle. The ultra-rich personally own absolutely nothing. By completely isolating their biological names from their financial ledgers, they remove their personal liability. To see exactly how these corporate shields operate in reality, we can look at Apple's international tax strategy from the early 2000s. As shown in this vector map, Apple incorporated legal paper subsidiaries in Ireland to collect profits from global product sales. Revenue from iPhones sold across Europe, Asia, and Africa funneled straight into this Irish node, bypassing standard U.S. corporate tax rates entirely. The attorneys identified a precise legal friction point. The United States taxed companies based on where they were physically incorporated, while Ireland taxed them based on where their central management operated. Apple incorporated the subsidiaries in Ireland, but managed them from the United States. Because neither definition fully applied, these became stateless entities, creating a massive, untaxed gray zone. Over a 10-year period, Apple routed more than $120 billion through this exact loophole, dropping their effective corporate tax rate to an astonishing 0.005%. That is $50 paid for every $1 million in net profit. This stateless engineering is not a conspiracy or an anomaly. According to the OECD, more than 40% of all multinational corporate profits are systematically shifted into low or no tax jurisdictions using this exact blueprint. When independent wealth builders scale past a certain threshold, they abandon the habit of putting their personal name on assets. Instead, they execute a 3-step offshore insulation matrix.
Step 1 requires the creation of a strictly legal corporate paper shell. This company has no physical office floor or employees. It exists purely as a set of corporate articles inside an anonymous filing cabinet within an offshore financial center. Step 2 demands total asset separation. You transfer all real estate deeds, high-yield portfolios, and massive physical assets, like this luxury superyacht, away from your biological name, assigning the legal ownership directly to the shell corporation. The final defensive layer, shown at the top of this diagram, locks the entire matrix down. The equity shares of the shell company itself are transferred into a cross-border, irrevocable trust based in an entirely separate country. You do not own the trust. You are designated strictly as the primary beneficiary. You retain full lifestyle usage of the mansions, yachts, and capital, but your legal ownership sits squarely at zero. If a tax authority or a legal adversary targets your wealth, the entire structure holds firm. A person who legally owns nothing cannot be seized or sued. But insulating the wealth creates a final mechanical problem. The moment you bring offshore money back to a home country to spend it, it immediately transforms into taxable income. To extract cash without triggering a tax event, the ultra-wealthy execute the borrow phase shown here. Instead of selling off stock and paying capital gains, They use their massive offshore portfolio as pristine collateral to secure low-interest private bank loans. This debt rollover runs for decades until the die phase. Upon death, a legal provision called the step-up in basis automatically resets the assets to their current fair market value, instantly wiping decades of capital gains tax liabilities off the ledger. A tax-free life insurance policy then pays out, cleanly clearing the bank debt. Because the IRS legally classifies loan proceeds as debt rather than income, the cash used to fund their lives is never taxed. This specific sequence renders income tax entirely optional. Sourcing elite macroeconomic theory yields zero return on your balance sheet without real-world execution. To transition from a defensive retail saver into a system builder, you must run the allocation algorithm on your life today based on your current liquid capital. If your baseline ledger holds under $100,000, you execute the passive compounding pipeline. You secure your lifestyle margins and automate every excess dollar into low-cost market index funds to build a massive capital base. If you lack liquid capital but possess hundreds of open hours, you execute the time leverage framework. You trade uncompensated time to master technical capabilities and use that cash flow to build automated digital machines completely independent of your physical presence. Whether you are buying compounding assets or building digital skills, the underlying goal is identical to the offshore architects: constructing a machine that operates independently of your own labor. Stop operating like an emotional consumer. Treat your assets and your trajectory like an engineered equation. Drop the hashtag future in the comments below right now to lock in your commitment on the grid. Subscribe, activate the bell, and we will see you right back here for the next masterclass.